Hello. It depends on where you stand or you sit, as they say. So income tax has not gone up and it has not gone down either. So it's the same. So you should have to decide whether you want to be happy with that or no. Well, that in some ways is a key takeaway from Union Budget 2022. Not much changes in many tax areas, but it could be either good news or not so good news, because particularly if you were expecting a tax reduction, but on the other hand, if you were fearing a tax increase, then you would perhaps be a little relieved. So let's talk through and discuss some of the key announcements for both direct taxes and indirect taxes and understand what they mean, particularly from the fine print as it's now emerging, and many people have got time to go through them and digest them. I'm pleased to be joined by Uday Ved, a direct tax expert, and also by Pritam Mahure, who's going to focus on indirect tax. Uday joins us from Mumbai and Pritam joins us from Pune. Thank you both for joining me. Uday, let me start off with you. So from your vantage point, as you've now gone through some of that fine print, what are the 2 or 3 clear takeaways, the positives, before we come to the negatives on from Union Budget 2022 tax proposals?
So I think you started well, by saying that there is not any additional taxes and no new taxes, no new burden is a good burden. Is a good point from a positive perspective. Very clearly, government has laid out a path over the last 4 or 5 years in terms of reducing tax rates, and it is stable and a predictable tax policy, which is very, very important from a larger investment climate perspective. And we have seen this, that look, people can now, you can predict, there won't be any surprise. So no new surprise, stable policy, predictive. And of course, there was no talk of any inheritance tax and estate duty, and rightly so, it didn't come today. So at some point of time, maybe in future, but not now.
Right.
So overall, I think good from a corporate and individual perspective. As we go along, I'll possibly detail some of the important proposals which will benefit new manufacturing companies, something good for startups, but as we go along on that.
I'll come to that. But again, Uday, as a headline, there's nothing that is hidden or was hidden in these tax proposals that are now jumping out?
No, so no surprise as I see it. That's
okay. Okay, great. Pritam, let me get a sense from you on indirect taxes. Firstly, what are your key takeaways?
See, we are now 4.5 years into GST. It's the 50th month of GST, I would say, after the 1st of July 2017 when GST was introduced into India. The GST Council has approximately met for around 28 times. That is as good as 6 times a year. So when it comes to budget, because the GST Council is every 2 months they are meeting once and they are taking some or other critical decisions with respect to the rates, with respect to other aspects. When it comes to budget, the number of changes are pretty much restricted to the GST Act. And that's where when you look at the GST Act, there are around 15 changes on a broad level basis which the government has proposed. Unfortunately, as you were sharing with Mr. Ved, that can you highlight about the positive parts? So there are only 1 or 2 positive aspects, I would say, with respect to the taxpayer, wherein the government is saying that you can claim input tax credit for maybe you are getting 40 more days. So it's an extended due date which the government is talking about. Apart from that, unfortunately, the good part ends there and the ugly part will start, because as you were talking about the fact that the devil will always lie in the details and in the fine print. So as we discuss further, we'll take you through what are the good, bad and ugly part of the from GST perspective.
Okay, so let's pick up on that, Pritam. So tell us about the 44-day the 44-day limit. What does that mean? So suppose I have entered into a transaction with someone. Take us through that process, and also what would happen if I don't pay my dues to the government in time?
Correct, perfect. So what the government is currently saying, so take an example of financial year 21-22. The government at present, before the amendment, used to say that a taxpayer can claim input tax credit. That is, if you are giving me a tax invoice as a Pritam Mahure and associate, I can claim the credit of the same up to 20th of October 2022. And beyond that, I would not be in a position to claim the credit. Now the government is saying instead of 20th October, the date would be 30th of November. So effectively, it is 40 days increase for you to claim the credit. So you are getting 40 more days. That is one favorable part. Additionally, if you wish to issue any credit note, because you want to pass on certain discounts, etc., then you can issue credit note. There also the government is saying that you will get 40 more days. So that is one, or the rather only one part which you can say has been on a positive front as far as GST taxpayers are concerned.
Right, and what's the flip side?
The flip side, there are numerous flip sides from GST perspective. See, to summarize it, I would say the government is trying to control the taxpayer to some extent whenever they are trying to utilize the input tax credit. Because when you look at the budget number, like say today also Finance Minister, Honorable Finance Minister rightly pointed out that the government collected 1,40,000 crore. So every month we hear this number 1,40,000, 1,25,000, 1 lakh number. So how this number emerges? So every month when the taxpayers are filing their GST return, they will show their outward liability of 5 lakh crore and they will claim input tax credit of 4 lakh crore. So effectively, they will net of this amount, 5 lakh minus 4 lakh, and 1 lakh crore would be collected by the government. So if the government wants to increase the tax revenue, what they are doing, they are saying on the 5 lakh crore, that is outward tax supply, that is the output tax liability, I will not focus right now. I will focus on the 4 lakh crore input tax credit claimed by the taxpayer. If I reduce this amount by 10%, 40,000 would be the additional tax collection for the government. And that is where they are trying to restrict this input tax credit. One of the new change which the government is proposing and to restrict the credit, they are saying that if the government is telling you that you cannot claim the input tax credit, then you cannot claim the input tax credit, because every month they are issuing you one document called as 2B, GST or 2B, and in which they specifically mention what credit is eligible to you and what is not. If they tell you not to claim credit, then you will not be in a position to claim the credit. That is on the flip side. Additionally, the government is also talking about the fact they can put across certain condition as to how much percentage of your liability can be paid by input tax credit. So if you are setting up a factory, you might be having substantial amount of credit and you want to utilize that fully. The government is saying, no, we will prescribe how much input tax credit you can utilize. So to some extent, it will trouble the genuine taxpayer. That is one flip side. Another with respect to cancellation. The government is saying, if you don't file your GST returns consistently, maybe for 3 months, maybe for 4 months, then your GST registration would be cancelled. Now, in today's world, if you don't have a GST registration number, it effectively means you will not be in a position to carry out your day-to-day business also, because people will stop buying from you. And right now we are witnessing one such case. In Pune, there is one big hotelier. Unfortunately, due to financial crunch, he is not able to make the payment of GST. His registration got cancelled, and all the B2B business, that is business to business supply which he was making, that suddenly vanished overnight, because people stopped staying in his hotel, particularly the B2B guys, and only B2C, that is consumers, are staying. But his 80% business was coming from the business entities.
Right.
So that is where cancellation is again going to be a big challenge for the genuine taxpayer. And
right.
even like say, due to Corona, all of us are aware, a sector like hotel has suffered a lot. They don't have enough financial capabilities to make the tax payment also. Yes, sir.
Right. Okay. Okay. So I'm going to come back to that. I mean, how that works and how tenable it is legally or technically in a moment. Uday, let me come back to you. So you've talked about some of the positives, I think, broadly. Now, can we go sort of a little deeper into it and how things stand, particularly from an individual to institutional, private equity investors, individual investors, and so on?
So, as I said, the tax policies are very stable and predictive, and that's very important from a certainty perspective and from an investment climate perspective. Particularly foreign investors, when they are looking at investing into India, non-resident companies, they just want the certainty. It's not that they don't want to pay. They want to pay their fair share of tax. Globally now there is a concept of BAPS, OECD has. So there is a concept of a value creation and everything. They want to pay the tax, but they want certainty. For the first time, as I said, the certainty part has come through, that if you file a return, and it also includes whether you file the return or you not file the return, and there is an assessment which comes in, you want to pay the tax, additional tax, the time given is 2 years. So if you pay between 12 to 24, 0 to 12 months from the end of the year, then 25% additional tax can be paid. Otherwise, 50% can be paid. So this is some kind of, people have started calling amnesty in last few hours that I've heard. I don't think it is amnesty. It is more easing the, the tax administration and reducing tax litigation. It's a permanent one. Then, so this is on the litigation side. On the capital gains front, as I said, when you look at the M&A transaction, which I briefly mentioned, when a non-resident or a private equity is selling the shares, they are subject to 10%. Indian residents are subject to 20%. So if any Indian institution or Indian investor is invested in divesting, but with the surcharge, the rate used to go from 20 to as high as 28.5%. Now, just by reducing the surcharge from 37 to 15%, at one state, there is a tax saving of 5%. Now, still, the delta remains between the base rate of 10 versus 20, but certainly this will ease out, the M&A transactions. From a startup perspective, again, there is a 3-year tax holiday provided. The startup had been incorporated and got into action by a particular date. That 1 year has been extended. So you want to, give fillip to the startups.
Right, and startups which I guess fit the definition of what the startup would be as defined by the Ministry of Commerce.
Absolutely. Yeah, so there is no change on that.
Right.
And then you get 3 year out of the, the 7-year tax holiday that you can take it in standard.
Right.
Then on the new manufacturing companies, 2 years back, for a base rate of 25%, if you set up a new manufacturing unit that came 2 years back in 2.5 years back in September of 2019, then the rate is 15%. With surcharge, it is 17%, which is one of the best competitive rates in the world. Where do you have 15-17% rate on the manufacturing setup? Nowhere. China is 25, USA is 21, going to possibly 26 or 27. UK is 20. So if you look at a comparison, we are as good as Singapore with 15 and 17%. So that part, again, the company was possibly incorporated by March 23, and they've extended by 1 more year to say that clearly you want to give fillip to the new manufacturing unit, and government is taking all the steps, particularly because we lost out on 2 years on pandemic and people have effectively not got any benefit out of that. Those who set up in September 2019, they started doing the manufacturing, your production would not have commenced. So that date for production commencement has been extended by 1 more year. Then benefits. Yeah, sorry, go ahead.
I'm going to come to cryptos in a moment because that's been a subject of much discussion. But specifically on manufacturing companies or new manufacturing companies, have you been actually seeing new manufacturing companies come up in this period to avail of this concessional income tax?
No, in fact, a lot of companies wanted to start doing it.
Existing companies were setting up new companies or plants, right?
Yeah, absolutely. So they set up a company, but the plant is just not moved forward because of pandemic, right? No, and that is one reason why this extension has been given.
But is pandemic the only reason, from your understanding?
This is one of the key reasons. Of course, people had put off some plants on hold and everything. But I've seen there is a clearly of Make in India and the Atmanirbhar Bharat part, where maybe lack of foreign, availability of funds is another aspect. But pandemic has played a major part in those companies who genuinely wanted to, start the new unit.
Right. So on cryptos, the government or the finance minister has proposed that any income from transfer of any virtual digital asset shall be taxed at a rate of 30%. No deduction will be available on income from this source except the cost of acquisition, and in case there's a loss, it cannot be set off. Now, from a top-down point of view, how much do you see this capturing? And then we'll come to whether it's good or not.
First of all, the rate is not 30. 30 is the basic tax rate. There is also an additional surcharge. So 30 can go up to 43%. And you assume that those with the cryptocurrency holders, when they sell, their income would be more than 5 crores. Okay. And so it can go up to 43%. That is one part. Second, I think there is RBI is still, looking into whether this should give legal sanctity to crypto or not. What will happen to people who have invested over last 8 or 10 years? Number of people have put in money through LRS schemes. Most of these cryptos would be outside currency, foreign assets rather. Okay. And so, in my view, the sellers will be non-resident today, who will be selling it to resident. So the question will come up more for taxation of those non-residents, And our research, at least initially, suggests that, interestingly, crypto or more virtual digital asset, VDA as it is called, is being specifically covered as a new definition under section 2, subsection 47A. There is this concept of a capital asset, which we are all aware, under section 2, subsection 14. So this has been differentiated. It's not part of capital asset. It's a different asset. Like you have a capital asset in the form of shares, securities, house, mutual funds, etc. This is a separate asset called virtual digital asset, and it's been defined. And it covers everything. Two things it does not cover is the Indian currency or the foreign currency as defined under FEMA. Okay. Other than that, so this will be, to my mind today, a transfer envisages certainly the gain or income that you will receive. So if a non-resident practically in today's scenario will sell to a resident, the question will come up whether it will be taxable, not taxable. And our initial, at least reading suggested that this will, if assuming it's a foreign asset, right, and then this is not an income which is deemed to accrue or arise in India, so they may not pay the tax. Once it comes to an Indian resident and Indian residents start transacting in that, then the tax rate will really come up. The TDS provision of 1% also is only when the resident sells, not to a non-resident. So effectively, I don't know whether the tax will be really levied. Those Indian residents, of course, who had invested and they are selling it, they will be subject to this tax.
Right. And Uday, I mean, what's your sense? I mean, how big is this today? I mean, if today we say that we are putting a 30% or 43% with surcharge tax on sale of crypto or profits earned from sale of crypto, what could be the quantum that we're looking at?
In terms of numbers, I think last 6 months particularly, people started investing heavily. But most of these are unaccounted, honestly, in my mind. So those who put in through LRS scheme, whether they have disclosed this asset in their tax return, you are supposed to disclose. And there is a schedule called FS, Schedule Foreign Assets, in case of an Indian resident. I don't think anybody would have disclosed those, except, and LRS, RBI is not even keeping track of it. So the actual numbers may, I don't know how much transaction would have undertaken. But in terms of government's ability to find out.
So you're saying, that's an interesting point, Uday. So you're saying that once I take out up to $250,000 per year under LRS, where it goes and what it does is not really tracked?
RBI is not bothered in the past. And what would happen is I would not have paid, number of people may not have invested directly. LRS also allows you to open a foreign bank account.
Correct.
Right? And then you can keep the foreign bank account. So out of foreign bank account, you might have paid, and it is not tracked by RBI, except in last 1.5 years, there is this TCS, the tax collection at source of 5%, which is where they started tracking the overall limit of LRS, not crypto or any other. Within LRS, you can invest anything, and that's why RBI's view was whether you can at all invest, in crypto assets out of LRS. That's one question where matter went up to Supreme Court, and it is still pending today. So RBI is, framing a policy on that. RBI's view is it is illegal and it should not have invested.
No, but any profits that you make out of investments overseas will be subject to tax somewhere, right? I mean, if it's in the United States.
No, it will be taxed. An Indian resident is taxed on a world income. Whether that asset is invested is a legal asset, illegal asset, whether money out of your tax paid money or a black money, it is taxed on a world income. So if Indian resident, then the government finds out that you have this asset which you have sold anywhere in the world, that's where the question was, what is the tax rate? Will it be like a capital gain at 20% or a normal income like a 30%, which they have clarified today, 30%.
Okay, got it. Okay, so I'm going to come back in a second on long-term capital gains, Uday. But Pritam, just to pick up on the last point that we were talking about, you said that the government can decide how much of that ITC or the input tax credit that you've paid them can be used and for what purpose. Can you just take us through that a little once again and with some more detail?
Correct. See, when the GST was introduced, that time the thought process of the government was, and as it was communicated to all of us, was that the taxpayer would be in a position to claim the input tax credit in a seamless manner. That is, input tax credit would be available to the taxpayer. However, as we proceeded, as we went ahead with GST, in the last 4.5 years, 2 new conditions have been introduced. Earlier, there were 4 conditions. Now, last year, they introduced a 5th condition, and now this is the another condition, that is 6th condition they have introduced. So what the government is trying to do now, they are trying to restrict the credit as much as possible. And one of the reasons for the same could be the numerous fake invoicing cases which are being unearthed on a daily basis. If you look at the DGTI official number, that is the government agency who tracks or takes control of all these fake invoicing cases. They are the main entity who are interested with identifying these kind of cases. as per their numbers, the amount of fake invoicing cases which they have identified is in the range of 1,75,000 crore rupees. So it is a substantial amount. So it can be as high as 2 lakh crore which they have identified. Now, if you look at the fact that the unidentified number, if it is 5 to 6 times more, then the amount will go into 10 lakh crore rupees. And that is the fake invoicing quantum we are looking at, and that number government knows. And that's the reason they are trying to curtail this input tax credit right to some extent. But the problem is, because of these non-genuine taxpayers who are involved or indulging into fake invoicing cases, unfortunately, new restrictions are being put onto the shoulders of the genuine taxpayers. Now, as you rightly mentioned, the government is saying how much tax you are going to discharge through ITC. The government would be in a position to now prescribe that to you. So that empowering provision they have introduced in the GST Act, maybe the GST Council will take it forward and they will say, if you are just obtained the GST registration, then maybe 20% you have to pay through cash. 80% maybe you can pay through credit. But maybe 90%. So something of that sort condition they will put.
But Pritam, is it not something that can affect companies, particularly when I say company, I'm thinking small companies, cash flow?
Yes, certainly, 110%. It will certainly affect. And as I was highlighting that, typical the genuine taxpayer will certainly will have number of issues because of this, and his working capital will get stuck. Additionally, although we are 5 years into GST, and although all the state government, Chief Minister, we are behind Mr. Elon Musk for asking him to set up the factory. The basic fact is, if you set up a factory in India for promoting Make in India and Atmanirbhar Bharat, the input tax credit of construction will not be given to you. So that will become a cost to you. So if somebody is setting up a factory and the construction cost is 1,000 crore, 180 crore is the penalty you are levying on him effectively by denying the 180 crore credit to him. If I am assuming 18% is the GST rate on that 1,000 crore rupees giga factory. So that is very, very unfortunate. So these kind of fundamental issues are not being addressed under the GST regime, and at the same time, you are trying to curtail the right of input tax credit. Right. Additionally, you would be agreeing that petroleum products are outside the ambit of GST. The aviation sector, we just celebrated Air India being handed over to Tata's back. Now the aviation sector was not able to fly also in the last 2 years. They not been able to recover their cost also. Now ATF is one of the products on which excise duty is leviable. Now on that ATF, if any excise duty is paid, they cannot claim credit. They cannot set off against their GST liability. So at least ATF should have been proposed to be included under this GST, at least in the next couple of months to come. That is also something which is missing. So as I mentioned, curtailing of ITC is one of the fundamental objectives of the government as far as GST is concerned.
Right. So, and is from a budget point of view, just to come back to that, I mean, would you say that's one of the key takeaways for you, which happens to be a negative as far as indirect taxes are concerned?
Certainly. I would say that, because the basic perspective which was given to the taxpayers when GST was introduced, that you will be having a seamless flow of credit. But instead of seamless, now the credit is seen less by the taxpayer. So seamless से हम अभी seamless में आ गए. We are seeing less and less credit as far as GST is concerned.
Okay, great. Uday, let me come back to you. Capping of long-term capital gains. The finance minister said that it would be she said the capping of the surcharge on long-term capital gains payable on financial assets at 15%. Walk us through what that means and how it's likely to play out.
So that first includes all capital assets, not only shares, securities, but land, properties, everything, all assets. And today, the tax rate for a resident long-term capital gain is at 20% for normal asset. And I'm talking of a listed, I'm not talking of a listed is 10%, non-listed is 20% for the shares and securities. So with 20%, the surcharge of 37% would become another 7.4%, which will go to 27.4%, and then there is a 4% cess, which takes you to close to 28.5%. Okay, so that's the maximum rate, which goes from 20 to 28.5. Now with surcharge being capped at 15, which was the case for listed company dividends, or for dividend it is capped at 15. Now even for capital gains. So 20 at 15 will become another 3%, which is 23%, and 23% times 4%, another 22%, close to what, 24. So instead of 28.5, it is close to 24%. So
Right.
clearly at the maximum impact is 4.5% tax rate, tax rebate, which is almost 20% of the current rate.
Right.
So which is significant. Which is significant.
So give us an illustration, Uday. I mean, suppose, for example, if I sold shares worth X, since we are talking about financial assets.
So impact is, say, let's assume I sold the shares for 100, and my cost is, say, 25. So my gain is 75. On 75, now effectively gain, which will going to be taxed, and I'm leaving indexation and other thing, leave that
right.
for the timing. On 75, close to 4.5% tax saving. Instead of 28.5, I will pay 23%.
Right. And what's I mean, is this something that was asked for? I mean, where did this come from?
No, I think they have equalized this with dividend.
Okay.
So always there was a dividend surcharge was kept at 15%, and the question was whether it includes dividend. If you look at 112, in the case of a listed dividend, it goes to 15%. So effectively, instead of 43, the dividend tax after the surcharge is 35.88. And so dividend and gain, I think the kind of from capital asset, what would you make? Either you will make dividend, or when you sell the stock asset, you will make gain. So they've equalized both dividend and capital gains.
Right. Okay. Just to come back as we head to a close for your sum ups as well as.
Just one more point.
Yeah, go
I
ahead.
think the difference is between an active income versus the passive income. So the whole purpose of levying 37 is the HNI, when it is earning out of an active compensation, business income, then the tax will be instead of 30, which was becoming 35, was 43, which is there today. But from passive income, they have said everybody is equal, and that's why the surcharge is kept at 15%.
Right. So there is this reduction. There's no other increase anywhere else, right? In the 1 crore plus salary bracket or.
No. There is absolutely no reduction, which is a good part. Otherwise, generally, whether this surcharge effectively people will go to 50, whether wealth tax will come, estate duty will come, all those questions are always there. No surprises, fortunately.
Okay. So, one of the points that the budget talks about is this updated tax return, which is supposed to help taxpayers who realize that they may have made mistakes. How important is this, and does a lot of this happen because of which this thing has come in? And in a larger sense, is there anything in this budget which suggests that the overall tax administration system is going to become simpler? That's also
which is good. As I mentioned in the beginning, this is like killing the litigation before it begins, right? So you come to a situation that either you have filed and it covers both, whether you file the return or you have not filed the return, and you are doing it for the first time, an updated return, where you want to come and say tax assessment has taken place after you file the return, and the income instead of 100 is becoming 120. So on the 20, there is an additional tax interest put together. Now what the law is saying that, okay, on the 20, your tax rate is, say, 30 as an example. You are going to pay that 6 rupee as a tax plus interest. So including that is a 6 plus interest. Now if under the current law, you can't even file a belated return beyond the end of the assessment year. So for, say, current year, financial year 21-22, you cannot file the return beyond 22, beyond next year. Okay. And so now they have given 2 more years to say that the updated return can be filed within 24 months at the end of the assessment year. So and this will apply, of course, from April 1, 2022. So FY 22-23, the assessment year will be 23-24. So you can technically file the updated return up to 26.
Right.
And they are saying if you file within 1 year, then the additional tax will be 25%. On this 6, you pay 1.5 and finish.
Uday, do you feel that a lot of people will benefit from this? I mean, that's really
It will. Absolutely. Those who want to kill the litigation, right? It depending on how the assessment has been done. And today, now there is all faceless, right? Faceless assessment. So you are saying, forget it, 100 has become 120 and I'm going to lose it. If I believe that if I'm going to lose it at a higher level, then might as well pay 25% extra tax on the tax and finish it off.
Right.
Once for all.
Right. Okay. We're running out of time. Pritam, last word to you. Your sum up from Union Budget 2022 from an indirect tax point of view, and what's the one thing that you think we could have done but didn't do?
I would say, as far as taxpayers are concerned, the government message is very much clear. File your returns and ensure all your vendors are filing their return also. So if you are having 1,000 vendors, ensure they also file their return. If your vendors are not filing their return, you are claiming ITC, then it will lead to EODB, that is end of doing business, not ease of doing business. That is one thing I think the government is giving a very clear and loud message. The taxpayer were very much looking forward to tribunals being set up, or at least some announcement on that GST tribunals, because we are into 50th month of GST and there is no place where the taxpayer can appeal to the GST tribunal. That is very unfortunate. In income tax, we are talking about faceless assessment. In GST, we are talking about baseless assessment. And there is no remedy also for you to go to tribunal. You have to directly approach the High Court. So I think that is where the GST payers are were disappointed a bit, that no announcement on tribunal and this tightening of input tax credit norms.
Right. Okay. Right. We've run out of time. Pritam Mahure and Uday Ved, thank you very much for joining me. Thank you for walking us through all the key hits and misses in Union Budget 22, particularly from a tax point of view. Some good news to look out for, as Uday points out, but also some concerns, particularly on GST and input tax credit, as Pritam points out. Thank you very much, and hope to speak to you both again.
Thank you. Thank you, Govind.
Thanks Uday ji. Thanks, Govind.
Thank you, Pritam.
Thank you.